Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly commentary on economic and market events. No, your eyes are not deceiving you. Coda is a lot bigger in the 2 weeks since you've seen him. And he's getting a little better on gnawing people's fingers, aren't you, buddy? Maybe a little better. This week's big news. In addition to the Suez Canal no longer being blocked and 10% of world trade is flowing freely again, this week's really big news is that President Biden has announced a $2 trillion infrastructure spending plan designed to upgrade America's crumbling infrastructure. Now, if you're keeping score, over the past 4 months, we've had a $900 billion stimulus package from the former Trump administration, a $1.9 trillion stimulus from the Biden administration, and in addition to that, those packages that have already passed, we've now introduced another $2 trillion. So all told, in the last 4 months, we have spent or announced the spending of close to $5 trillion. We have not spent money like this since World War II and the fight against militaristic fascism. Now, in response to the $2 trillion stimulus package, Alexandria Ocasio-Cortez, the congressman from New York, predictably said, it's not nearly big enough. But back here on planet Earth, $2 trillion is still a heck of a lot of money, particularly when it comes on top of the $3 trillion that has already been announced that's going to be spent. $5 trillion in total spending. It's extraordinary. What are we getting for this new $2 trillion package? Well, if President Biden gets exactly what he wants, let's lay out the big ticket items in this bill. And I'll try and divide them between things that are likely to get bipartisan support and things that is this really infrastructure? And are the Republicans and maybe some of the conservative Democrats in Congress going to be a little nervous about this? All right, so first, about $600 billion of the $2 trillion is for improving our transportation infrastructure. Good old-fashioned highway spending. As a matter of fact, they expect it will improve about 20,000 miles of highway, which is about 50% of the total U.S. Highway system, which that sounds pretty good. All right, now the next big ticket item is $400 billion for that classic infrastructure need of care for the aging and the disabled. Now, don't get me wrong. With a rapidly aging population and with the terrible scourge of Alzheimer's, there's a tremendous need for caring for the aging and the disabled. But in an infrastructure bill, $400 billion dedicated to that purpose is probably going to be pretty controversial because it doesn't sound quite the same as, say, building a new highway or resurfacing a highway with lots of potholes. It's not classic infrastructure. That one's probably going to be controversial. All right. Then there's $300 billion to boost manufacturing, particularly semiconductor manufacturing. And I think after COVID and with our current conflicts that we are having with China, I imagine that this is something that's going to generate a tremendous amount of bipartisan support. It's almost a mantra in America that if it's for manufacturing, we're all for it. Yes, we need more of that. All right, so that's probably going to get lots of bipartisan support. All right, $200 billion is going for affordable housing. Now, affordable housing that's infrastructure. It's bricks and mortar. But if you remember the last big government programs in affordable housing. The last time we made a big push on this was in the 50s and 60s, and it was an utter disaster. And public housing projects became sort of like a synonym for places where no one wanted to live. Now, that doesn't mean that it couldn't be done better this time. And my son just moved from New Orleans, and New Orleans in the post-Katrina did an amazing job of rebuilding their public housing in mixed income communities and so forth. They've been tremendously successful. So I'm not suggesting that this couldn't be a great thing, but I suggest that the Republicans are going to have that attack line of, oh great, more public housing projects. So this one's going to be very controversial. $100 billion, you're going to hear most of the bill is for broadband. We've got to get broadband into our rural communities. And there is $100 billion, which you would think would be a lot of money until you compare $100 billion to the overall $2 trillion price tag. There's a lot of money there, but as a percentage of the overall package, it's probably one of the smaller items. Now, how do we pay for it all? Well, with a good old-fashioned American way, we're going to borrow the money and we're going to print the money to borrow it. But that's not all that the Biden administration has proposed. What they're saying is, yeah, we'll borrow it initially, but we're going to raise corporate taxes to pay down the debt over time. And that's new. We haven't been proposing any way to pay down the debt in a long, long time. So, is it possible that this could be a good part, a bipartisan? Well, not likely. President Biden has suggested that we would go from 21% corporate tax rate to 28%. That essentially undoes 1/2 of the President Trump corporate tax cut from 2017. He cut it from 35 to 21. President Biden wants to split the difference at 28. Expect the Republicans to absolutely, positively hate that entire concept. However, I have to note that there've been a lot of Republicans on the news nonstop, and I read the Wall Street Journal every day, and they are absolutely saying that a tax increase like this will destroy the country and kill the stock market and blah, blah, blah. And it just so happens that the day this has all been announced, the S&P 500, the main index for the stock market, has broken out to an all-time new high. So if it's going to be a disaster for corporate America isn't convinced of that yet. There is one element I happen to like a lot, but that I'm thinking that the stock market is suggesting it won't pass, because President Biden is suggesting a 15% minimum tax for corporate America on your reported earnings. Now that sounds pretty complicated, but here's how it works. Companies like Amazon report to their shareholders that we made billions and billions and billions of dollars and you want to buy our stock. And then they turn to the IRS and they said, we didn't make any money this year. And so the IRS says, okay, you don't owe any taxes. And the stock market goes, wow, you guys are super profitable. We want your stock to go up. Now, what the Biden administration is saying, we're going to close the gap here a little bit. If you tell your shareholders that you made billions of dollars and you tell the IRS that you made nothing or lost money, guess what? You're going to pay the IRS at least 15% of the money that you reported to your shareholders. So if you're going to tell your shareholders you're doing really, really well, you can't keep telling the IRS that you're going broke. This feels to me like a pretty good proposal. But the fact that the S&P broke out to all-time highs the day that President Biden proposed it makes me think that a lot of investors think that when this gets into Congress and all the lobbying happens, this thing's going to die in committee. I personally hope not, but we'll keep an eye out on that. There are other things that are going to be pretty controversial. For example, they're going to build 500,000 charging stations. Isn't that wonderful? That's going to make electric cars much more practical for people to use. It's going to make Elon Musk even more money. He's already pretty rich. And another likely criticism is we have hundreds of thousands of gas stations, and I don't remember the taxpayer having to pay for any of them. The private sector wanted to build those gas stations. Why does the taxpayer have to build these charging stations so that Elon Musk can make even more money? These are going to be some of the things that you're going to hear discussed and debated and so forth over the next several weeks and months. What will it ultimately mean for the stock market? Well, ultimately, what it's going to mean for the stock market, in our opinion, is $5 trillion is a lot of money. There is a huge amount of stimulus being thrown at the U.S. economy with the Trump $900 billion, with the Biden $1.9 trillion, and now another $2 trillion in infrastructure spending. And the tax increases that they are talking about are relatively modest. There seems to be some disagreement as to whether the most important of them, that alternative minimum tax for corporate America, whether that would even be passed. And it's essentially saying we're going to pay for this bill, we're going to spend the money now, and we're going to pay for it over the next 15 years. You can see how the stock market and the overall economy would be very, very excited about that. And even if some of these items, even if the total bill is not $2 trillion, if some of these more controversial items like, public housing or caring for the aging, should that really be a part of a infrastructure bill, even if those fall out of the mix, you're still talking about a heck of a lot of money on top of an economy that already seems to be picking up steam. And that should be very, very good for equity investors. Thanks for joining us for Market Insights. We hope you found it informative. If you did, please like the video and share it with your friends. If you'd like more of our research, you could subscribe at the link below or check out our research on caravelconcepts.com. Thanks.
I thought that states paid for their highways.
The vast majority of highway spending absolutely does come from the states. And this is why there's always been a little bit of controversy about how significant the federal government is in providing infrastructure spending anyway. However, $600 billion funneled, even if they funnel it through the states, they haven't really said how the mechanism would be allocated. Right. But even if it's funneled through the states, it's still going to ramp into overdrive a lot of the available funds for fixing highways and bridges and airports and so forth.
When you say infrastructure, my mind kind of went to schools first, because our schools are falling apart.
You actually, I did not bring that up, but there is money for improving school infrastructure. I think a lot of it is to kind of retrofit for better social distancing and so forth. But
what about the crumbling walls?
Mold
and mildew.
It's not one of the big lumps in the gravy, because there's no question that school spending is dominated at the local level. But there is money for education spending, without question, within the overall bill. Well, that's part of infrastructure. So I imagine they probably will. But will it be, whereas on the highway side, $600 billion is enough to move the needle. When you think about how little the federal government spends in relation to state and local governments on education, will it be enough to really make a noticeable difference in the school infrastructure? I personally would probably suggest probably not.
Yeah, it just seems funny that we would spend a bunch of money on highways, because I know, driving around, I can think of a couple of states where I'm like, wow, these roads are not great. But I mean, for the most part, I feel like Virginia roads are pretty good. But I just feel like
you've got to buy a sample. Remember that you happen to be, most of the roads that you drive on are the roads that connect the major military bases and logistics like Fort Lee, Quantico, Fort Bragg. All of that comes through Virginia and then down to Norfolk and the largest naval base in the world. So the soldiers and the bullets and the beans and all that have to come through Richmond to get to the ships that take them around the world. So the federal government overinvests in Richmond roads. We're not the problem.